Momentum Asset Management focuses or manages assets in excess of 3 billion rand invested in Africa and outside of South Africa for group clients, institutional clients in segregated mandates and retail clients via equity and fixed income unit trusts. Now to take a closer look at investment opportunities in Africa, we're joined in studio by Fungai Tarirah. He's a portfolio manager for Africa at Momentum Asset Management. Thanks very much for your time. We're talking about the Momentum Africa Equity Fund this evening, inception July 2009, and just looking at your exposure, big play into Nigeria that makes up some 27.6%. Now this is your fund fact sheet ended 31st of March 2012. Kenya 21.1%, and then you've got your next biggest player being Namibia and Egypt, then Morocco, Zimbabwe, Zambia and Mauritius. Talk to us a little bit about the rationale behind the fund and what you're seeing in performance.
Okay. What we try and give people who invest in the product is exposure to as many African markets as possible, where we think we can actually find value. We tend to find the stocks we put in the portfolio on a bottom-up basis, and where we think we've come across stocks that can deliver decent returns, we try and include those into the portfolios. Right now, our weighting to Nigeria is particularly large. That's as of March, but you'll find coming into April, we've actually increased that weighting as well. Apart from stock performance, but also us adding to the weights that we see there. A lot of the stocks have been beaten down quite badly since the global financial crisis, and it has been tough times trying to recover from that. Coupled with the fact that the banking sector has had a significant difficult period that they've actually gone through, where they've had to actually reorganize how many of the institutions are actually set up. Now we're starting to see clarity. Now we're starting to see the resilience of earnings coming through from quite a number of those stocks. And for us, that actually poses some interesting opportunity. So we've actually increased our exposure to that region. But also on the back of that, apart from banks, insurance and financial, we are looking at other parts of the continent where we see the consumer story unfolding, and that is why we actually like Kenya, and we have a lot of weighting to the country.
And Fungai, you seem to be quite underweight in Egypt at the moment, is that correct? I mean, Egypt is what, 10% of your portfolio, and it's much bigger. Is it 20% of the benchmark?
If we take the market cap of the investment universe, Egypt would be as high as about 35%, if not more. And for quite some time, we have actually been underweight the country. One of the things that irks us the most is the fact that there is no visibility. It is coming through now, but there hasn't been visibility in terms of the political situation and how that is actually affecting business on the ground in Egypt. We have not seen clarity in terms of the presidential selection. We have not seen clarity in terms of how they're going to form the parliament, and therefore funds flowing into the country from the IMF, from well-meaning GCC countries have not actually been coming through. That puts risks on the exchange rate, and that puts risks on the operating environment.
Why
for a
is
lot
it
of the
doing so well, the
businesses.
stock market? Isn't it up one of the best in the world so far this year? Is it just a bounce or something?
Up about 35% in the year to date, in dollars, in US dollars. So that has actually been stellar. But if we dig deeper into that number, we actually find that a lot of that performance has come through from the telecom sector. Right. And that has largely been Orascom Telecom and a company called Mobinel, which have actually been event-driven in their own price movements. At one stage, Orascom Telecom was up more than 110%.
One of the biggest stories on the continent at the moment is the oil and gas story, and that's followed by mining. Yeah. And then, of course, you get the consumer story. Now, I see in terms of your allocation here, you've only got 4.6% allocated to resources. You haven't pulled out any specific oil or gas exposure across the continent. Why have you chosen to almost negate that focal point on the continent?
A couple of things to consider in that respect. The biggest story we feel in oil and gas on the African continent right now is actually in upstream. So the production of the oil, the extraction of the oil, the extraction of gas from wherever it has actually been found. You get companies like Tullow, which is the UK-based exploring business. They've actually found many pockets of gas and many resources of oil right across the continent, and seem to be finding even more as we go forward.
They've got big exposure, Tullow in Ghana.
Correct, among other African countries. Unfortunately, however, this does not tend to reflect itself quite well in African listings. So if we were to look at stock exchanges across Africa, the amount of market cap that actually comes from upstream oil and gas is actually less than 2%. What you do find, however, is a lot of these downstream businesses which do the distribution of processed goods from oil and gas. And there, when we look at those sort of stocks, we're not seeing as much value as we'd actually find in other areas. So we seek to participate in upstream oil and gas, but in an indirect manner. So we look at the economies that are benefiting from that. It means they're going to have cheaper energy costs. It means that they're going to have trickle-down effects coming through from the proceeds of these oil and gas sales, and that is where we think the value will be derived.
Now, this is a little unfair because I've just been to Ghana, and I have to ask you, why no Ghana exposure here? Because the growth rate sitting at over 13% if you take into account the recent kicker from oil. But even if you take out oil, you're sitting with a growth rate of 8% in Ghana, and prior to that, it's averaged 6% a year for 5 years. Isn't that a story to get excited about?
It is a very exciting story, and we wish we could actually get exposure to the things that are driving the economy on the stock exchange. Unfortunately, we're not getting direct exposure to many of those sectors, and that is one chief problem that we actually have. That's one. Two, the fact that you don't have many listings on that stock exchange means that a lot of money is chasing the few stocks that are actually listed, and we don't think that does well for valuations. The third and last consideration for us is the currency. If you look at across the continent, Ghana's currency has been depreciating on an annual basis in excess of 6% against the US dollar, and that looks likely to continue.
It's actually 6% in the first quarter of 2012.
In the current
and if
year,
you look at the prior period, it was only a 2% depreciation of the CD.
Yeah, but if we take a longer period, you see that perennial weakness has continuously been coming through, and that for us poses a significant macro risk to that, appetizing growth that you actually get to see when you look at GDP rates.
Well, I'm amazed at how poorly African shares have done in the last 3 years since stock markets bottomed in March 2009, and yet the economic growth has been 5% plus. And it's like China. China's booming, but the stock market's gone nowhere. African shares have done so little during this bull market, 3 years so far, despite very good economic growth. What's underlying all this? What's the problem?
That's a fair point, and as momentum asset management, that's why we believe value lies in stock picking. If you take a look at the portfolios that we have, for example, over the last 3 years, we're actually up in US dollar terms, despite the fact that continental bourses have actually been down. That emphasizes the need for stock picking and for going into each of those exchanges and trying to find the real pockets of value. But nonetheless, why have these bourses underperformed? I think the biggest reason, or two of the biggest reasons, the fact that liquidity plays a large part in the movement in prices across the stock exchange. So you look at a place like Kenya, when it was out of favor, stocks like Safaricom will get pushed all the way down to 2 shilling 60 a share, even though the fundamentals of the business are actually quite solid. Now that Kenya is coming back into vogue, you see the stock go all the way back up to 3 shilling 30, which is, I think, the closing price quite recently. So liquidity is a very big issue as to why you don't get that performance coming through. And we have seen a lot of liquidity pulled out of the African markets, going back to the developed world and indeed into emerging market debt. So that has affected prices. But the second thing is the fact that stock markets do not fully represent the economic makeup of a lot of those countries. Nigeria is a simple example. 42% of GDP is agriculture. But if you look at the stock exchange, less than 5% is agriculture. So it's very hard to play those GDP dynamics on those stock exchanges. But it means that stock picking is key.